This is question number 7 of quiz 12 for chapter 11. If depreciation expense in year 1 of a project increases for a highly profitable company, so we have 4 choices. Let's consider what happens if we increase the depreciation expense. And to understand that, let's first find just list the items on a typical income statement. So we know that the income statement starts from sales, and then we deduct expenses, which means it's typically cost of goods sold, and then the selling, general, and administrative expenses, and then we also deduct the depreciation, and then that becomes EBIT, and then we deduct interest expense, and then that becomes taxable income or EBT, and we deduct taxes, and then that's our bottom line, the income statement. All right, so this is the typical structure of an income statement. So now if we increase this depreciation, we can imagine that EBIT will decrease, right, because we are deducting a higher number, and EBIT decreases. But then the question also, if we go back to the choices, A is net income decreases and incremental free cash flows increases. And B is net income increases and incremental free cash flow increases. And C is net income decreases and incremental free cash flow decreases. And D, the book value of the depreciating asset increases at the end of year 1. And obviously D is not correct, because if we increase the depreciation expense, then the book value will decrease rather than increase. So the correct choice has to be either A, B, or C. And also we can determine, because we are deducting a higher expense, basically depreciation is one of the operating expenses, right? So the EBIT will be smaller and all other things kept the same. Then we can imagine EBT will also become smaller, hence taxes will become smaller, hence net income will become smaller. So net income will decrease, so it's gonna be A or C. And then the remaining question is whether the free cash flow will increase or decrease. So the free cash flow will be the operating cash flow, and we do the 2 adjustment, the change in net working capital and the change, and then the capital expenditure. There's nothing in the setup which says which relates to operating cash, which relates to the net working capital and the capital expenditure. So the only thing that matters to answer the question about free cash flow is operating cash flow. And then if we go back to the formula for the operating cash flow, basically is the EBIT plus depreciation expense and minus income taxes. So we know that EBIT basically is obtained by deducting sales, deducting expenses and depreciation from sales, and then we add back sales. So EBIT plus depreciation will be the same even if we increase the depreciation. And then the only thing that will determine what happens to the operating cash flow, hence the free cash flow, is the income taxes. Right? So the income taxes, because the taxable income will also become smaller. And the question mentioned that the project is very profitable. The company is very profitable, which means that the taxable income got to be positive. Now even though it's positive, but it's a smaller positive number. Hence the taxes will also become smaller. Hence the free cash flow, going back to the formula here, because the free cash flow is the operating income, which is EBIT plus depreciation expense. As we just discussed, EBIT plus depreciation doesn't change, but because income taxes becomes smaller, hence the operating cash flow, hence the free cash flow will actually increase. So that's basically A. And check my answer.